Okay, so till the previous revision session, we had completed consolidated financial statements. We covered the consolidated balance sheet part in that, or consolidated statement of financial position. Now we move on to the next part, which is consolidated statement of P&L. Now, consolidated statement of P&L is more simpler as compared to a consolidated statement of financial statement, because here generally you're not required to calculate goodwill and all of those aspects. You just need to consolidate the P&L. Again, here you have to add items line by line basis. For example, revenue, parent, subsidiary, 100. Let us say this is 50. So consolidated would be 150. It's a straight line by line addition. But the things that you have to keep in mind is intra-group transactions should be eliminated. That is, if parent has sold 10 to subsidiary, that 10 has to be removed from the revenue. That 10 has to be removed from the cost of goods sold or cost of sales. So any transaction between the parent and the subsidiary must be eliminated, and the amount will be eliminated in full. Okay, so when you are preparing a consolidated P&L, you will have to say, okay, how much is revenue from parent to subsidiary or subsidiary to parent? Remove fully. How much is cost of sales included because of this transaction? Remove fully. That is one thing you have to keep in mind. Second thing is media acquisitions or disposals. You will have to take subsidiary revenue or subsidiary items on time proportion basis. This is very important. On a basis of time proportion, you have to consider what is the subsidiaries, P&L. So if I've acquired in middle of the year, I will only consolidate 6 months result. I will not consolidate the full year result. That is the second part. Then there would be adjustments like impairment of goodwill. The question will tell you whether you have to take it in other operating expenses or cost of sales that should be done. Then there will be additional depreciation to be provided because of fair value on date of acquisition. So there may be additional depreciation that you need to provide, or there could be provision for unrealized profit. All of these items must be adjusted at the respective places. For example, provision for unrealized profits, you will adjust it against cost of sales. So whatever is the provision for unrealized profit on inventory that you have calculated, you have to adjust it against the cost of sales, right? Taxation, you will take whatever is the number given, you will add those number and you will arrive at the taxation figures. Then once you have arrived at the consolidated profit, you have to see how much is belonging to NCI and how much belongs to owners of parent. So from subsidiaries P&L, you will say, okay, this much amount pertains to the NCI and balance amount pertains to owners of the parent. That is what has to be disclosed. Okay, so the only thing complicated which can arise in a consolidated P&L is removing the income, removing the expenses, and provision for unrealized profits on sale of, let's say, inventory. Okay, so that takes care of the consolidated P&L. There is nothing much to do, when it comes to consolidated P&L. Then the next part is group disposals. So as you acquire a subsidiary, you obtain control over a subsidiary. In the same way, there can be disposal of a subsidiary. Now, when there is a disposal of subsidiary, you have to see what happens in standalone financial statements and consolidated financial statement. In the standalone financial statement, what should be the treatment? In the consolidated financial statement, what should be the treatment? In the standalone financial statement, consideration or sale value minus carrying amount is the profit or loss. Whatever is the sale value minus carrying amount. Sale value of what? Of subsidiary. Carrying amount of the investment. The difference is considered to be profit or loss. There is no problem on this part, right? So sale value of subsidiary minus carrying amount of investment will give you profit or loss. Now, what do we do in consolidated financial statement? Here you have to be extra careful. When we consolidate a balance sheet, we take all the assets, we take all the liabilities of the subsidiary, we take NCI, we take goodwill and we show that in the balance sheet. Now, when there is a sale of subsidiary, what happens is you have to remove or de-recognize in the consolidated financial statement assets of subsidiary, liabilities of subsidiary, NCI, asset including your goodwill. So this is one number, this is another number, this is another number, or I'll put it 1, 2. Okay. Now, total assets minus liabilities minus NCI. This is total assets minus liabilities minus NCI gives you the net assets to be de-recognized. This net asset which will be de-recognized, you will compare with the consideration. And if consideration is more than net asset, there is gain on disposal. If consideration is less than net asset, there is loss on disposal. So, okay, so net assets minus consideration. So, sorry, consideration minus net assets. Consideration, whatever is the amount, minus net asset. Net asset is your asset of subsidiary minus liabilities of subsidiary minus non-controlling interest. Whatever is left will give you the gain or loss on disposal of the subsidiary, and the gain or loss will be appearing in the consolidated P&L. Okay, so that is as far as the disposal of subsidiary is concerned. Whenever there is a disposal of subsidiary in the consolidated P&L, you will take the items only till the date of disposal, only till the date of disposal. So that is the broad thing about your consolidation. Disposal of a subsidiary and how should that be treated in the consolidated P&L. Now, in the examination, questions can be what is the profit in the standalone, what is the profit in consolidated. So you have to be careful while reading the question. What is the question asking? Right. So that takes care of the disposal part. Then we have associate accounting. Which method do we follow for associate accounting? What is the method called? Sorry, it was on mute. Or you can type in, that is better. What is the method called what we follow for associate accounting? Bala, you there or lost some? Equity method. Okay. Equity method of accounting is followed when we have investments in associates. Very simple accounting. First, you will take what is the cost of investment. To this, you will add post-acquisition share of profits. You will reduce dividends received. You will reduce impairment of investment, and then you will get the carrying amount. When we prepare consolidated financial statements in case of subsidiary, please remember in case of an associate, we do not add revenue, assets, and all of those things. We will present a single line item called investment in associate. Present a single line item called investment in associate. Original investment plus share of profit minus any dividends received, and if at all there is any impairment, that is what is considered. Right. Now here there is also a concept of your intercompany transactions or intra-group transactions where the entity sells to the associate or the associate sells to the entity. Okay, so now please remember how we should handle this. If associate sells to parent, there is one treatment. If parent sells to associate, there is another treatment, right? So when parent sells to associate, if the parent sells to associate, what we do is we will reduce it from the group's retained earnings. Whatever is the unrealized profit, and whose share? Parent's share. Unrealized profit of parent's share. Okay, only for the parent share. You will not adjust it for NCI because other share. Because for other shares we have already sold, we can recognize that portion. Whatever is our share, that share will be reduced from the group retained earnings. Will be reduced from the group retained earnings. That is the first part. And because parent has sold and that is lying in the inventory, it is lying in inventory of associate. You have to remove it from the inventory. So remove it from the net asset. When you have to remove it from the net asset, you will remove it from investment. Okay, because the inventory is lying as a part of the net asset in the subsidiary. So to the extent of parent share, you will remove it from the investment. Then if associate sells to the parent, you will remove it from inventory. Slightly different, but very important to remember for the purpose of examination. Now what we'll do is, we have covered the broader aspects. Now what we'll do is, we will take up a question from the practice kit, a comprehensive question that will help us understand how do we handle the constructed response questions in the examination. I will not do holding subsidiary because holding subsidiary is more or less, done enough in the class. Okay, I will take up another question where we can understand one from analyzing the financial statements. So I'm taking up question number 435 from, I'll just share the screen. Shown below are the financial statements of Wood Bank for its most recent 2 years, year 3, year 4. Revenue, cost of sales, gross profit, distribution, administrative expenses, loan note interest, profit before tax, income tax expense, profit for the year. And a statement of financial position, non-current asset, PPE, goodwill. Now, when you see a new item called goodwill, what comes to our mind? There has to be an acquisition. Okay. Then current assets, inventory, trade receivables, bank. Total assets have been given. Now, equity, 80,000, retained earnings. This extra retained earnings line you can ignore. You can have it twice. 80 plus 15 is 95. So this you can ignore. Non-current liabilities, 10% loan note. So loan note has been given, taken. Most likely to acquire the subsidiary. Current liabilities and total equivalent liabilities. Now, on 1st of January, the company purchased the trading assets and operations of Shaw for 50 million. I think I've done this question in the class itself. But still, let's see, there will be some differences as well. On the same date, issued additional 10% loan notes to finance the purchase. Shaw was an unincorporated entity, and its result for the 3 months from 1st January to 31st March, the 3 months period. And net assets are included in the Wood's financial statements. There are no other purchase or sale of non-current assets during the year. So here they are very clearly told there are no other sale or purchase of non-current assets. Extracts of the results for 3 months of the previously separate business of Shaw are given below. So 3 months till January, 30,000, 21,000, 9,000 gross profit, distribution cost 2,000, admin expense 2,000. So 9,000 minus 4,000, 5,000 is the operating profit. Following 6 ratios have been correctly calculated for Wood Bank for the year ended 31st March: ROCE, net asset turnover, gross profit margin, profit before interest and tax margin, that is your operating profit margin, current ratio, gearing 36%, 5.3%. Calculate for the year ended 31st March equivalent ratios to the first 4 only for Wood Bank, excluding the effect of purchase of Shaw. Assume capital employed for Shaw is equal to its purchase price of 15 million. So, same question we have done it in the class as well. You have to exclude the results of the subsidiary that has been acquired. After excluding, calculate a revised P&L. In the capital employed, exclude 50 million. See, this information, when we did the question in the class, in that question, this information was not given. But in the examination, they are extra careful to give you all the information. Then, assess the comparative financial performance and position for Wood Bank for year ended 31st March. Your answer should refer to the effects of purchase. Discuss the further information specific to acquisition of Shaw that would allow you to make more informed assessment of Wood Bank's performance. So, first, calculate the revised P&L, which we have already done in the class. Second, compare and comment with respect to subsidiaries acquisition. And third, what further information specific to the acquisition of Shaw would allow you to make a more informed assessment? So let us see how do we present the solution. This is question number 435. See, so that is what I was explaining in the class also. This style of question is naturally time consuming. Ensure you answer all parts of the question and do not spend too much of time in calculating ratios. While interpreting the results in part B, be wary of making generalization. You must ensure that you relate it to the information given in the question. Presentation is crucial in part B, so make it easy for the marker to read by using short paragraphs and have spaces between the paragraphs. The highlighted keywords are the phrases that the markers are looking for. So now here, first, figures in the calculations excluding shock. So how do we calculate return on capital employed? How do we calculate the net asset turnover? All of these are based on formula: gross profit by excluding the acquisition, profit before interest and tax margin by excluding the calculation, right? So these four can be calculated with the help of the information given in the question. Okay, then as I was explaining in the class, everything you have to prepare a proper structured report, but what are the items that we should consider important when we are giving this answer? So now when comparing the current performance and position using trend analysis, it is necessary to take into account the effect of any circumstances which may create inconsistency in comparison. This may be included, this may not be included. This basically means that when we are comparing to the ratios related to performance and position, we have to see whether there are any inconsistency or whether there are any one-time event. Okay. 2004 figures include for a 3-month period the operating results of Shaw, and Woodbank statement of financial position includes all of Shaw's net asset together with additional 10% loan notes. None of these items were included in year 3 statement. So this is the statement of fact. The net asset when purchased were 50 million, which represents 1/3 of the net asset as of 31st March. It therefore represents a major investment for Woodbank. The conclusion. See, look at the conclusion part. It would be seen that the purchase of Shaw has had a detrimental effect on Woodbank's ROCE, or you can say Woodbank ROCE has declined from 13%. Okay, so what is the ROCE without Shaw? Without Shaw, ROCE is 13%. With Shaw, ROCE is 12.0%. So acquisition has actually dragged or reduced the return on capital employed on an overall basis. Also, in the class when we were discussing, we said that we are including the profits for 3 months, revenue for 3 months, assets for the full year. Again, that may not be a correct way to compare. Then what has happened to the profit before interest and tax margin? Has it actually increased? So that is 1. Okay. So ROCE, when you have to comment about ROCE, there are 2 ratios which comprise ROCE or which make up the ROCE, which is asset turnover and profit margin. So asset turnover, what has happened to asset turnover? Again, you come back to your calculation. Asset turnover is 1.2 times. So now the turnover, if you see the ratio, it has improved from 1 to 1.2 times if you exclude Shaw. But if you include Shaw, 1.2 times, it is again come down to 1.16 times. So acquisition of Shaw is having a detrimental effect. That is what we can understand. But this also means the fact that we are taking capital employed for the full year, but whereas we are taking turnover only for 3 months period. If you include the full year period, then it will definitely improve. Okay. Then again, similar comments on liquidity. It has fallen. Does it have any cause of concern? What are the numbers there? Then what is the cause of deteriorating liquidity position? Basically, what I told you in the class, what has happened? Why has it happened? And what can be done? For example, here they have mentioned dividends could be suspended or heavily curtailed. You can discontinue dividend or you can reduce the dividend, which will ensure that so there's some power fluctuation, which will ensure that the liquidity position improves. Same thing with the gearing. Okay, so gearing here, if you see, everything has been financed using loan. We could have used some point of equity. And then what can be done? Dividends can be handled well. We can use something like raised equity instead of financing everything by loan. And because we have just included 3 months period, we have to see over the next year how much of this would turn into a better position in the future. Okay, then additional information. Shaw statement of financial position. We don't have the financial position. That would help us, compare it better. Statement of cash flow would help us compare better. If there are any one-off cost associated with the acquisition, that also we need to, consider. Is there any contingent consideration? That part you can, maybe ignore as well. So some consideration for, taking into account what happened because of Shaw's acquisition. Then any potential savings. What is the nature of business? And what kind of customers, some 4 or 5 points you can do. So here if you see, they have given, I'll just give you a comparison, 4 plus 3, 7 points, 1 mark per relevant point to maximum 4. So even if you write 4 or 5 points, that means that is sufficient. You don't need to write all the 7 points. Again here, 1 mark per point relevant to maximum 12. So in these kind of responses, calculation of ratios will give you score. And here, normally my experience with marking also, when I mark strategic case studies, papers and all of that, the average score is 50 to 60% for the comment part. Okay, you cannot find the perfect answer in the examination. So you should try to cover at least 8 to 10 relevant points so that you get decent score in these type of questions. Okay, and the best way to get is read, take a few questions and read their solutions to figure out what kind of questions or what kind of information is the examiner asking. These highlighted points. So once you start reading, everywhere you see 1 mark per valid point, 1 mark per valid point, 6 marks per ratio, 9 marks per, for points, 5 marks per points. So if you see the pattern, the third requirement, don't spend too much of time in elaborating. Okay. So that is the broad thing. Now, as far as, your preparation is concerned, I have broadly revised everything. Is there any specific question, especially in the constructed response question, you want me to cover, or in preparation of, financial statements, PNL you want me to cover? Anything specific, you can unmute yourself now. Anything specific you want me to cover, please, feel free so that I can, help you out with that. And have you practiced using the, practice platform? That is the second thing what I wanted.
Sir,
Yes.
so as of now, we don't need like, it's not necessary. It's enough, sir, actually, for consultation and this purpose overall. This thing. Once again, we'll do the revision, and if it's possible, if any other doubt, shall we let you know, sir?
Yeah, you can let me know any other doubt. That is fine. That I will definitely, cover that part. So very importantly, especially, where you need some, writing practice in constructive response question when you have to interpret and evaluate. Try to, as I told you in the previous class also, right? Try to do 3-4 questions and, find out the ratios, calculate, and then see how well or how close are you there to the examination. And again, the maximum marks possible which you can draw in this subject, that will come from your objective type questions and objective case based questions. That is where you will have maximum thing coming from. Okay. Then in the 2 constructive response questions, be careful with the Excel, do proper working. Okay. Because it's, the spreadsheet thing that will be easy for you. That should not be a challenge at all. Apart from that, whenever, if at all you feel that, sir, I need, we need to cover 1 thing or 2 things, that I will be more than happy to do it. So 1 more class, when is your exam? You said 8th, right?
8th, sir.
So 1 class next week, I will be doing a question from this particular compiler. So here we have this questions, right, which is a comprehensive question to prepare the financial statements. Okay. So from this, I will be taking up 1 question and I will be doing it in the class so that you again have a decent amount of practice as to how they have been presented in the examination.
Okay. Sir, in the chapter 23, that employability in technology.
That is only to do how to handle.
How to know.
There is nothing for that in the, so this is what you're saying, no, this 23 chapter.
Yes, sir. Yes, sir.
This basically tells you how do you respond in the question, what will happen, what will come and all of that. So it is nothing to do with the exam as such.
Okay, sir.
Okay, so what we will be doing is in the next class, I will be taking up 1 question of, we'll revise this once again because you must be aware of the format. We have done it multiple times. We have done the PNL, but once again, we'll run through this sometime in the next week so that you are thoroughly ready for the examination. And did you practice on the platform? Was my question.
So the full examination pattern, sir.
Yes.
Sir, to be true, I have not yet practiced, sir. I just planned to practice in this week, sir.
Please see, at least do practice because you will get a sense of how the examination is there. Okay.
Okay, sir.
Because it's a computer-based examination, there must not be any surprises when you go for the exams.
Yes, sir. I understand, sir.
Right. So please, practice using that. And then if you have faced any challenges in that, we can discuss one-to-one on a one-to-one basis so that I can guide you better on that.
Yes, sir. Sure, sir.
Yeah.
Because
Okay.
last week had some, we had to travel also and continuously had some work, sir. So
So you're in Bangalore right now?
yes, yes, sir.
Okay,
And me, sir. Yes, sorry. And now I'm in Bangalore. Are you asking, sir?
So your exam center is in Bangalore, right?
Exam center is in Bangalore, sir.
So you have reached Bangalore or you have not yet reached?
No, sir. Now I'm not going to Bangalore, sir. Actually, I'm in Tamil Nadu now. In Coimbatore only I'm now, sir. I've just for other work I went to Madurai.
Okay. I thought you went to Bangalore. So when are you going to Bangalore?
Sir, on 6th I have planned, sir. 8 is exam, on 6th I'll go, sir.
Okay. And where is the center?
It's in RT Nagar, sir. Vision Technology.
RT Nagar. Okay.
Yes,
Center
sir.
of the
RT.
city.
Yes, sir.
Okay. Check. Chalo then. So next week, one day I will be planning for this where I will again revise because there is a high probability you get a 20-mark question and we must be able to handle this properly. Right?
Okay.
And then
Sir, also,
yes.
sir, also when I talk to my friends who have did ACCA, sir, they just suggested me that in consolidated statement of financial questions, they'll compulsorily one 20-mark question will come. So is it like the pattern is correct, sir? Actually, I know we have to study all. I know we have to study also, but based on the past papers, I'm asking, so actually.
No. So I didn't get your question.
So actually, based on the past examinations questions, whether it is like continuously consolidation is coming or
maximum time. So we have this, no? This file has the analysis, and you will get. See, most of the times, they have been tested in the examination in the constructive response, ratio analysis, and this.
yes, sir. Okay, sir.
Okay, so that is where consolidation was a lot of focus, and I think you are comfortable with consolidation, if I understand.
Yes, sir. Yes, sir.
Okay, so target should be objective type score maximum.
Okay, sir.
Okay, and then whatever is the extra marks in constructive response, that is should be the focus. So if you see here, see groups, it's a performance appraisal, and then here you see group financial statement, consolidated statement of P&L in two terms, financial position here, or there is something to do with disposal, something to do with associate, something or the other is there.
Yes, sir.
Okay.
Okay, sir.
Yeah. So, thank you.
Sir, also, sir, is that like at last, sir, however, 1 day or 2 days before the exam, if I try to like do the complete revision, sir, which are all the particular chapters? If there are any important chapters, I can do more revision on that, sir. So
see, I'll tell you. So where students normally struggle. Okay, this is an across every course I have seen. Leases, revenue, financial instruments, consolidation, impairment. Okay, so these are the key. See, inventory, if you ask me, property, plant and equipment, if you ask me, all of those, because you have been learning it for a long time, you will handle. Okay,
yes, sir. Yes.
Something in financial instrument, if there is some twist, then you will feel, wait, what happened? And there is a lot of stress also because these are new chapters.
Yes, sir.
So focus should be leases, financial instrument, revenue, consolidation, disposal of groups, impairment of assets, associate accounting, and some focus on how to construct the response for the performance appraisal or ratio analysis part. So that was my suggestion. Take up 3-4 questions every day. Take one question and see how the answer is being written, so that you get some pointers to write in the examination.
Okay, sir.
Okay.
So we'll do more revision on these chapters, sir, if possible.
Yes. And typing practice.
Okay, sir.
Because you don't know what kind of keyboard and all you'll get in the center. So be ready for that. I got a really bad keyboard.
But we can ask for change, sir. Like,
Correct. You can ask for change. But what happens is in that limited 3 hours time, no, you are in the stress of examination.
yes, sir.
You'll get, you will not get, you don't know. Okay. So all of these are things which are not in our control.
Correct.
Correct. So be prepared. Anything can. So in my case, I'll tell you what happened. My case, my hall ticket number didn't have my registration ID.
Okay, sir.
And I had to fill up the registration ID and I forgot my registration ID. So it took me 10-12 minutes to go out, request to the, the facility there, access internet, download the registration number and then fill.
Yes, sir.
That was unexpected for me.
Yes, sir.
Okay, so it happens. So carry your registration number, your exam kit, docket, what you have got, and then
Yes.
carry your ID proofs so that you don't, and especially you are in a different city. So that is one. These are things which can, stress. And when you are stressed out before you start the exams, then again everything will be scary.
Yes, sir. Also, the language may be problem also there, sir. If someone
No, Bangalore, I think English should happen, and you understand Tamil, right?
yes, sir.
You speak in Tamil, correct? So
Yeah,
Tamil
yes, sir.
and Kannada are more or less,
More or less, yes, similar,
manageable
sir.
in that way. So be in time, be ahead of time. So that is, yeah.
Yes, yes, sir. Yes, sir.
Yeah. So thank you.
Thank you, sir.